All right, so we left off with the Russell, and we discussed that it could get to that 584 range after breaking out of 551. 584, 585 is the next target after that breakout. We're going to get there again. If we keep this volume and momentum that we've had for the past couple of weeks, we can easily, and I mean easily, get there. Easily get there. Is it gonna be that easy? No, I don't think it is, and I don't think this momentum's gonna hold. I was shocked that we had as much green as we did on Friday with Microsoft and Amazon missing just ridiculously. So it's something to look for, these resistances and these supports on these four indexes: the Dow, the S&P, the Nasdaq, and the Russell 2K. Gotta watch them. Gotta watch them all in congruency. And you need to make sure that all of them are similar. There is a Twitterer out there, and she is darn good. Desi Finance, at Desi Finance. If you visit her blog or talk to her on Twitter, she discusses the similarities that take place in the Russell and the S&P, and she's been nailing it over the past couple of weeks. I enjoy following her. I think she's a great one to follow. So at Desi Finance on Twitter, check her out. She's good with these indexes. All right, let's move to the indicators now. Let's see. We got the VIX, the TRIN, the UVOL, and the DVOL. And I set the NYSE Advance and Decline volume here. I set them up on a 5-day range. So we can check them out now on a 5-day range and recap the entire week. We had a heck of a volume. I'll tell you what. We had some monster volume on Tuesday out of the Bears, and we had some monster volume on Thursday out of the Bulls. Thursday out of the Bulls was close to I guess 5-1, and that's pretty much how it was the entire week. The Bears really couldn't get anything going. Even on Tuesday, the ratio was 7-4 by the close on that Tuesday. So these Bears aren't doing anything. They're not doing anything to make any advancement in their cause to try to get people short. This market has turned bullish. Very, very bullish in the short term. Are we still in a bear market? Economically, yes. Now here's the question. What about the stock market? What about it? I'm not sure anymore. We could be going into the new bull market. I'm shocked myself, but I don't think we're going to be getting out of it this easy. Keep your heads on a swivel, as my coach would normally say. Gotta watch the defense, gotta watch the offense, gotta watch everything. Be aware. That's UVOL and that's DVOL. They've lost the edge. They, being the Bears, have lost the edge volume-wise, which allows them to move very easily lose momentum in this market. The VIX was down all week. The only thing about the VIX was it was down by little margins, and Gio from iBank pointed that out, I believe, on Tuesday or Wednesday, where he said, hey, gotta watch this VIX. It's flat, and it's not making any large declines even in these big updates from the market. That is something to watch. It's been holding that center line, so if it drops below or if it drops above, we're hitting resistance here on the channel. It's been a downward channel since that March bottom for the VIX. Or the March top for the VIX, March bottom for the market. VIX is something to watch. Can't rule out volatility yet. For the week on the TRIN, which is the short-term trade index, big spikes, odd spikes on Tuesday and Thursday, or Thursday and Friday, I'm sorry. Thursday had this egregious spike here, all the way up to 327. That was a big day for the Bears. That was that huge day, that huge breakout, the 5-1 volume. Even with that, that pretty much showed that a lot of people were in and out of a lot of stocks. That's what you're seeing here. And a lot of people, even when profit was taken and we got the trend all the way down to 0, it stayed flat. So the range to watch, in my opinion, is 1.5 to 1. Any break above that, and you're probably going to get a big move. Any break or hold below that level, and there might be a big move coming. Again, a break above 1.5 has really proved that you can see a huge move in these markets. And indicator-wise, that's about it. Let's start looking at a couple of single stocks and ETFs and IE.